Welcome to FundsUp.me, the podcast where we dive deep into the world of finance, uncovering the secrets of investing and exploring the strategies that can help you navigate the complex maze of the financial world. Whether you're a seasoned investor or just starting out, we are here to provide you with insights and advice from the experts. I'm your host, Eduardo Marcos. Today, we have a thrilling episode lined up for you. Today's guest is also an experienced mortgage broker in the US, and together we shall distinguish mortgages between our countries. Without further ado, let's get started. Hi, Ben.
What's up, Eduardo?
Hey, how's it going? Thanks
Good,
very much
man.
for coming in.
Absolutely.
Yes. Would you like to present yourself to the audience and see what exactly we do so they were aware of your business?
Sure. As I was sitting here, I was looking at this pen, and it says I closed with Ben, but maybe my pen should say I closed with Eduardo.
Yeah.
So my name is Ben Mitas. I am a mortgage broker, and my business is from the United States, mostly Florida, but all over the country. And I've been in the industry for about almost 20 years now.
Wow.
It's my only job I've ever had out of college, so I know numbers. You
Yeah.
know numbers. We know numbers.
Yes.
And that's what we do. So my family and I moved to Portugal almost 5 years ago. And so basically I'm doing loans in the United States from Portugal.
Wow.
And I was introduced to you through a Facebook group.
Yeah.
And instantly knew that you were the guy to help me out. And
Thank you very
been
much.
friends
Yes.
ever since.
Yes,
So,
that's right. Yeah,
yep.
you see, did you say 5 years? How do you like it so far?
Yeah, love it.
Yeah?
It's a great place for our family. Two young kids running around. Just couldn't be happier. There's zero buyer remorse, as we would say. We made the right decision.
Yes, excellent. I'm happy that you're happy.
Yeah, thanks, man.
Let's keep it that way, right?
Yeah,
Okay.
absolutely.
So basically, I mean, as you may know, I've got a lot of clients from the US. I always get the same type of questions. So I thought about structuring, giving these kind of videos so that people are aware. It's a bit like seminars,
Yeah.
or being back on college.
Yep.
And since I get a lot of questions, I thought it would be idea for us to compare the main differences between doing a mortgage case in Portugal compared with doing a case in the United States. Okay?
You got that right.
So my first question for you, right, how was your experience as a home buyer using finance in Portugal? What do you feel and what you were most comfortable with? What were the big differences that you weren't exactly so sure? So could you help those folks out there?
Yeah. So I think probably me being in the industry in the States helps me see these differences very clearly.
Yeah.
And a lot of them are just surrounding the income calculation. Some of them are surrounding how you actually arrange the loans.
Right.
Like on our side, we have agencies, and these are agencies that have been in place for 40, 50 years. They come with computer systems. And when we do a loan, a lot of times we just make sure that the data in the computer is accurate. And if it's accurate, you press a button and it tells you approved or not approved.
Right.
And there's not a whole lot of price disparity from one client to the other. And I think for me, that was one of the biggest differences in getting a loan is knowing that it is going back to almost like a loan committee. Like there's somebody that's making a decision at a table, and it's not a computer making the decision.
Yeah.
So getting this set up for my purchase, which I did finance through you, super happy with the results.
Right. Okay.
We can get into the quite a few differences, which I experienced firsthand. I've been in real estate and mortgage for 20 years almost, like we talked about. So I think it's very interesting from the buying standpoint as to how those play into not only the mortgage side, but also the real estate side and the processes as well, because we're all used to the same pattern. When we buy a house in the States, whether it be in California or Tennessee or Florida, it's largely controlled, and most people expect the same type of result every time. There may be some nuances between, different areas of the country, but in general, it's very predictable.
Yeah.
And so I had an expectation as to this is how the way it's going to be, and then going through it, super happy with the outcome. But it's all about understanding what you're about to go through and making sure you work with the right people.
Yeah.
And that's where I have a very good intuition usually when I meet people. First impressions are big to me, and that's why when I met Eduardo, I knew after speaking to you for like literally 5 minutes, I'm like, he's the one. He's the one.
Thank you.
He's going to help
much.
me. Yeah.
I would say, it's as an analogy, like, let's say Portuguese people like red apples, Spanish people like green apples, French people like yellow apples. So basically,
Wait, French people like something?
Oh, all right. All right. Sorry for the French out there. Yeah, that's a really good one. Yeah. But what I'm trying to say, you've got something on the back of your head, and because you have the information as if it were in your country, and after living abroad in Spain, the UK, the Netherlands, I can tell that culturally people have different ideas about the same result, about the same event. So one of the things I first managed to learn is that the fact, okay, what's this person's expectations, and let me just construct what these expectations are and it plays out with when his feet is standing on the ground. Okay, so I reckon this is fairly important, and I do know that the process from the US varies quite a lot from Portugal. Just going back, you did say it's a bit automatic. Well, it's actually automatic in US. In Portugal, for Portuguese, we have the case which is fairly automatic, not as automatic in US, but everything ready over here with the computer systems, the documentation required for the approval is not standardized. So basically, that requires analysis with different banks. Okay. At the end of the day, I hope the result is the same, but it takes a bit long time. Don't you agree with that?
Yeah, I would. I would agree with that. I think, it was very clear to me as to what the expectations were, and providing the right documents, I think, is important, regardless of if you're in the U.S. or here or any other country in the world. Like, they're going to ask you for this paperwork, and making sure you actually give them what they ask for is half of it. And I experience that. I'm sure you do as well. Somebody says, give me a bank statement, and they give you a receipt for dinner last night. It's not the same.
No,
you have to actually deliver all the items that have been asked of you. And I think you were very clear with that. And I'm sure the different banks you coordinate with, and where you're shopping for the best deal, those types of documents are so important up front. And I think it was clear to me, and I think it's the same with me and my clients in the United States, that we know what we're getting into and what to provide. Yeah,
okay, that sounds fair enough. So tell me one thing, Ben. You bought your first house, you used a mortgage. If I remember correctly, you bought a loan for the main house, and you also get renovation loan. Okay. We did a lot of shopping and analysis. It did take quite a lot. Would you agree with that? Yeah. But if I remember well, at the time you did what they call a variable rate mortgage. How was your experience, and were you happy with the rate you got at the time? And after a couple of years' time with going to your mortgage, do you feel there was something playing against you because interest rates went up at the time, right?
Yeah, I think obviously no one could have predicted the after effects of COVID and how it impacted us financially in the mortgage industry and the cost of borrowing. I think ultimately for us, we bought this house, really beautiful house, and had an architect immediately lined up even before we signed the contract to help us work with the city to get approval for this project, which we did end up with approval. The reason we sold the property. The reason we did that was a lot of it had to do with inflation. The inflation impacted the cost of our loan because it's a variable rate loan, and also the cost to actually build the house. When we initially signed the contract to buy it, and when we purchased the house, the cost to build was X. And then, a year later, when we're actually ready, because we have the approvals from the city and we're ready to start building and meeting with contractors and everything, the cost is now X plus 48% or something along those lines. That's so it just became a situation. Also, things in Portugal do take a lot of time. And that's one thing I've learned over time, being here for almost 5 years now, is the importance of patience. And I'm not a very patient person, but I think knowing that it would have probably been another 3 to 4 years before we're living in this house, those are the reasons we sold it. But going back to your question as to the variable rate, do I have any like negative feeling about it? No, I don't. It was just bad timing, but even had I think at the time, one of the offers that you presented to me was a fixed rate, and I don't know exactly. I don't want to, quote anything, but I think at the time it was like 2 or 2.5% for a fixed rate loan, and I'm like, but I went for the variable because it was actually lower at that point in time, and rates had been so consistently low for such a long period of time.
That's right.
Who in the world would have ever thought that they would have gone from, 1% to 5% or whatever they might be on a variable now, in a matter of a year and a half. Yeah. So I don't have any remorse. I think it's definitely a little bit uncomfortable for most Americans to think about getting a variable rate.
That's right.
Because it is such a high, it's such a difference. Like I would say 95% to 98% of people that are getting a mortgage in the United States are getting fixed rate loans. So that's just what they're used to. And it's like, you drink coffee with cream for, 15, 20 years of your life. And then all of a sudden you go somewhere and you're like, we don't have any cream. It's like, oh, well, do I still want the coffee or not? And
you're right about it,
but ultimately I think it's very normalized outside of the United States to get variable rate loans. And for us, I think it was the right decision at the time, and I don't have any problem with them.
That's right. I suppose it was coming from the history in the past 5 years prior to your mortgage, the European Central Bank was promoting what we call a negative rate. For you guys out there, there was a time in Portugal or any country within the European Union that we actually had negative rates. So on the variable rate, what we do, we had a spread on it, and that, let's call it the bank's profit margin. And for 5 years, the loan would be, with the monthly installment actually will be the same each month after month. And then the inflation came up, whatever the reasons are, Ukraine war, pressure on oil, whatever. Interest rates went skyrocketing, and all people across the industry, especially clients, they started feeling, oh my God, my monthly installment is coming. I remember my first mortgage, actually my only mortgage, I was paying something like 6%, and went all the way down to 1%. So if interest rates are coming down, you're happy about it. If it's the other way around,
the other way,
exactly. But all right. So we talk about variable mortgages.
What are they now? What are rates running in Portugal now?
Okay, so if
just
you actually,
general,
in general, if we go for a variable rate mortgage, I would say we get close to 7%.
Okay.
Even with the recent cut in ECB.
Okay.
What most people are currently doing are going for what we call mixed rate. So basically, you lock in a certain amount of period. It's
for like 2 years or 5 years.
Whatever.
Years. Okay.
And you can get as low as 290.
Okay.
All the way to 3.5. After that, it does turn variable. So if you are a conservative person, and like you say, in most cases in US, like fixed rate mortgages, I would say go for the fixed. You pay the downside, you pay a smaller, higher premium to buy the security, but at least your domestic budget is there. It doesn't change.
And
whatever.
I think, if I'm not mistaken, from my experience, if you do a fixed rate mortgage, the early payoff fee is a little bit higher than a variable. Is that true?
That's correct. Yes. So cool. So basically, if you have a fixed rate, or you while within the fixed period of a mixed rate, you pay an early payment commission, whether it's total or partial, of 2% plus stamp duty, which is 4% on top of the 2%. Okay. So while you have a variable rate, you pay 0.5%. Okay, so the game plan in this case, let's say,
and I think that was part of also what incentivized me. Because even if you were to say, okay, well, a fixed rate, there's more security, but a variable rate is more enticing for the short term. I think what sold it for me was knowing that if I'm gonna pay off this mortgage, or like you said, do a principal reduction, in the early stages of the loan that on the fixed rate, it's going to cost me more than the variable. And I think that, for me, is why that was one of the big deciding factors.
That's right. Yeah. So what I was trying to say is that the plan is, how long do you expect to keep this house if you are a conservative person? So let's say I want to keep it 7-10 years. Then by all means,
Which is
just,
average.
Yeah,
Yeah.
which is average. Just lock in the 10 or 7 years, whatever you can. And after that, when you turn variable, it becomes cheaper, the closing costs in order to sell the property.
Cool.
Yeah,
Makes sense.
that's right. Okay,
That makes sense.
So we're coming here together on the car, and you mentioned something which I find quite interesting, is that in US there is no limit in terms of age while you can.
Yeah.
So this kind of a.
We're huge on discrimination, anti-discrimination in the United States, and especially in lending. They call it Fair Lending Act, and you can't discriminate on the basis of age, sex, religion, disability, sexual preference, all these different characteristics.
Right. Okay.
And the one we're talking about is age. So, for example, I once did a loan for a woman who was 95 years old.
Wow.
And I did a 30-year fixed rate loan.
Wow.
Because you cannot, even though we know this woman is going to die before she's 125, I mean, let's be realistic, the law prohibits us. So we qualify her based upon a 30-year amortized payment, and you look at the income, you look at the payment and all the debts, and that's how we approve the loan. And it doesn't matter if she's 95. But when in my experience in Portugal, there's a limit, right? What's the age the loan is supposed to be paid off by?
It's 75.
75.
Yeah.
So if you're 50, you cannot get a 30-year loan.
That's right. Yeah.
Because you'll be 80
Yeah,
at the time.
yeah.
So.
Well,
So you could only do what, a 25-year loan then?
Yeah, that's right. Yeah,
Yeah.
and there are certain rules in as far as the length of the loan is concerned. So the rules change if you're 37, or if you're 35, or if you're 30. So
Okay.
it's quite
Yeah.
it varies quite
Yeah.
a lot. So people get struck by the fact that mortgages in Portugal can only be done until the age of 75.
Right.
And this is something sometimes difficult to process, right?
Yep, exactly. As a foreigner coming in, you would not expect that.
Yes, that's right.
Because if you're 60 years old and you need a mortgage and the payment is based upon a
That's right.
15-year amortization, obviously it's much harder to qualify. And
That's right.
talking about qualification, that's a significant difference for me and what I experienced, because in the States we qualify based upon gross income.
Right.
So if I'm looking at somebody who's maybe an engineer and they're making $100,000 a year, you look at the income as $8,333 a month, and that's the qualifying income. It doesn't matter how much comes out of their paycheck. If they're paying for a really elevated health insurance premium, or if they're sending a lot of their income to a 401k retirement plan, or maybe they have these different deductions that come from their paycheck. So if you make $8,333 a month gross, but maybe the net is only $5,000 a month.
Yeah.
You're qualifying that client based upon $5,000 a month,
yeah.
and I'm qualifying them based upon $8,333. Now, I think your debt to income ratios are allowed to go a little bit higher than mine. Typically, on our side, we cannot go above 49%. There are some times with, like, for example, a veteran loan. If we have a veteran, they can go as high as 70% debt to income ratio. I'm doing one now that's 72%. But most of the time, it's 49%. So on your side, you're probably...
Well, in terms of debt ratio to income, the ideal term is about 35%. So this means if you make $1,000 per month, your monthly installment cannot be higher than €350 or $350. We do, however, we have some cases it goes above 50%.
Yeah.
Banks are allowed to do that. It's all to do with variations and the way you calculate it.
Yep.
But interesting that you say so. We're discussing that here. You have 75 years, so it means you need to put more money or you pay a higher amount. So if it's above the 50% or the 35%, whatever you're coming from, that means you probably won't qualify.
Yeah.
That's right. So it's kind of a downsize that you can expect. and this is important for people out there to realize that in terms of calculation, and I do struggle a little bit. What you're trying to say is that, as an analogy, is not Portuguese salaries. They come in net, but for instance, in many banks they include what they call the lunch subsidy. Okay,
Yeah.
that is part of the income, and is calculated based just to their ratio to income. It's funny you should say that, because in the same bank, I've had different approaches. I've had approach where the cash you put in your 401ks is actually accounted for,
Yep.
at least a certain percentage, or it's not accounted at all.
Yeah.
Okay, that's changed. So basically, come on, I'm making.
There's it depends who's making the decision, right?
Yeah,
And
that's
how
right.
they're feeling that day.
Yeah, and now
Whether
you
they had
argue.
2 or 3 espressos,
Yeah,
that
yeah.
kind of thing. Yeah.
It's kind of funny also you say that, because I've had cases where Portuguese client doesn't really matter. Okay, this person wanted to do everything on her own. She liked a local bank and said, "Fine, you can do that." It didn't get approved. And then when this person approached, "I would like this bank, and can you approve it for me?" So it's funny that with the same bank, I managed to approve. So the debt ratio to income is the same, the income is the same, the lifestyle is the same. So what's the big difference? I can tell you is the way you build your case. So you've got certain arguments, lifestyle. I know people these days, they go as far as looking at your LinkedIn account, who you're working for,
Yeah.
what job you do, this kind of stuff. Is it the same in US? Do you do?
Actually, so no, absolutely. So when I started in the industry almost 15 years ago, we talk about the 5 C's of lending, which is, and I'm probably going to forget one: credit, character, collateral, capacity to pay the debt, which is debt to income ratio, and there's another one.
You forgot that.
Yeah, I forgot it. That's fine. Collateral, yeah, whatever. One of those being character, and character is one that I was, you meet somebody, you talk to them. Are they polite? Are they good people? And that doesn't matter in our industry at all anymore in the States.
Yeah,
And
yeah.
so when you're talking about building a case, basically people would walk into my office, and when I started, and they would basically say, "This is why you should lend me the money." And they would say a story. They would talk about how long they've been in this job. They talk about their family, how they lived down the road their entire life, and that was part of it. Anymore, it is not, and that's where it is not. We don't humanize the approval process.
Yeah.
Like I said before, when we put the person in the computer, we're literally pushing a button. And it's taking everything into consideration: the credit, the income, the assets they have. Everything about this person is from a financial standpoint is being evaluated by a computer model. But so my job as a loan officer, when I'm telling somebody whether or not they're approved, is simply to make sure that the information in the computer is accurate. And as long as it's accurate, if the computer says they're approved, these people will get the loan.
Yeah.
There is nobody that can come in and say, "Hey, I found this on your Facebook," or "I don't like this about your LinkedIn," or somebody I know saw you at a party. And no, it doesn't work like that. It's
That's right,
literally button push, approved,
yeah.
yes or no.
Yeah. So the bit is not as human as possible, but I would say it's fair enough. I would say in terms of characterization, it's not to do with the fact that people, they've got one color or the other, they pray to one god through the other, but it's not exactly. It's also to do with job security.
Yeah.
I mean, banks tend to focus more on people which are doctors, which have a job security or job stability, as opposed, let's say, somebody who is serving on the table in a diner. The job security is not. So this is what they realize.
Right.
And unfortunately, it's a bit like that, because you should be isolated. I don't know exactly the word, but it does change quite a lot depending on profession. Currently in Portugal right now, IT people, they are trendy. Doctors are trendy. And people actually want these kind of loans because they know they've got affordability and they can pay off the monthly installment.
Sure.
I think it's to do with the case that in the past, Portugal had a lot of down closures back in 2012.
Right. Yes.
So the market dropped 50, 60% the market value, and the collateral, which is the property, actual property, just reduced the price, and people could not afford to pay anymore. So
Right.
they live in the houses.
Yep.
So banks did quite a lot of effort. In terms of foreclosure, is at the lowest historic at the moment. But it's true. But I do understand. I do understand where you're coming from.
Yep.
I mean, I suppose if it were the case like yours in Portugal, it would make my life much more easier.
Yeah.
To approve a lot more loans.
Exactly.
Yeah? That's
more.
that's,
It would just be more computer work and.
yeah,
Yep.
that's right. I remember you mentioned something quite interesting to do with the credit,
Yeah.
the credit. People find quite awkward when I'm doing a mortgage for a U.S. citizen, Canadian, whatever, or even British citizen. I asked the credit report, not the credit score. How was your experience? Can you tell the folks out there what's your experience, or what's your idea in there?
Yeah. So, we use credit reports. Credit reports have a score, of course.
Yeah.
But most Americans tend to just focus on what the score is because, we're always encouraged to just have a really high credit score. It's gonna help you in life. It'll help you, finance your house better and things like that. But I think what from your and I standpoint, what we care about is capacity to repay the debt. And part of that is knowing, okay, what kind of obligations do you have, right?
Yeah.
And there's no better way to know what kind of obligations somebody has than looking at a credit report, because every single credit card or car loan or mortgage or any kind of liability, and also debts you don't pay. We're talking about character earlier, and if you go to the doctor and somebody fixed you and you were sick and you got help, or you broke your arm and they put a cast on you, and then you didn't pay that off, like that kind of gives a little indication as to, are you going to pay your debts in the future? Yeah. And as a mortgage broker, that's really what we care about, because we're representing the banks. We're the middleman between the banks and the buyer. And so, but our duty is to represent kind of both. Like, we need to make sure that if we find a client that wants to borrow money, that when we deliver that to the lender, are these people actually going to pay the debt back? And so when we're looking at credit reports, that is an excellent indication as to, do these people have a problem? Do they have too much debt? Can they afford all these liabilities that they have? Or do they have a history of not paying things? Yeah. And so that's, from my standpoint, I guess you don't get that in Portugal. Like, there is no centralized credit bureau, right?
Yeah, there is one, which is what they call the map of Portugal, central responsibilities. But if I understand well, if a person is in debt, let's say he makes $10,000 per month, and his debt a 9,000, and he wants an additional 1,000, and he's got an excellent credit card, 800 or above, would that possible to be approved?
No.
Not approved.
No.
Okay.
We do have there are some creative loans that we have in the U.S. That are not backed by the agencies.
Right.
So these are not the types of loans you would press a button and get an answer. These are more loan committee type decisions. And some of these options are available for people that might not fit inside the standard lending box.
Right.
So for people like that, there could be options to where somebody with an 800 credit score, but they have a lot of debt, they might still be able to get a mortgage that comes with more down payment and a higher interest rate.
Okay, so just increasing interest rate just to cover the risk. It's funny you say, because I've had approvals of U.S. citizens with a credit score of 500 or less. The only reason it was approved is that because these people didn't have any debt whatsoever. No. And they're going to move to Portugal and they could afford to pay it. While I've had cases with 800 or above, they got rejected. Only the back, these people were highly indebted. So it kind of tells the debt service to income. Let's put it this way. Okay. Now, as far as Portugal is concerned, there are three major stages of approval. We've got the financial approval. We have what you call the technical approval, which to do with the appraisal. And finally, we have the final confirmation, which to do with the title of the property, the finances document, and all these documentation that are attached, which is actually the most difficult part for me. Now, just focusing on the way the process runs in US, is it similar to that? Are there differences to this?
So on my side, there's actually we do loans sometimes that do not even require an appraisal. So
Right.
these are generally for people that are putting quite a bit of money down. They have pretty good credit and maybe strong debt to income
That's
ratios.
interesting,
Yeah. But the way that the process usually works, and it's quite different in Portugal versus the US. I will pre-qualify somebody and basically give them a letter that says they're pre-qualified. So they'll go out and they'll look for homes, they'll shop with a real estate agent, they'll find a house, they'll make an offer. When they have an accepted contract, then that's when we actually start doing the heavy lifting. So that's when we would order an appraisal if it's necessary. We order the title work. But as far as like government documents and things, the only thing is, so the title company or the settlement agent will perform the diligence on the property to make sure that there's no liens that are, undiscovered liens. If the current owner of the property has a mortgage on it, they order the payoff from the mortgage holder. So it's a very transparent process. And actually, bringing that up, that's kind of a funny thing. Like when you go to a closing in Portugal, if the current owner has a mortgage, there's a guy from the bank there signing off on the mortgage.
That's right,
and that's completely different. On our side, the title company just gets a letter and says, hey, you owe us $322,000 as long as we receive it by July 17th.
It's funny you should say that, because on the back of COVID, quite a lot has changed. So basically, we have in place something we call the APB protocol. APB, it stands for the Portuguese Bank Association. And while if you are there, basically you can the seller can come in his bank and say, hey, I'm going to sell the property. I need the closure on this mortgage. And it's going to be done electronically. The only cases there is this person there is when these people are part of the program. Okay.
Got it.
But that's a development that's happened since you asked.
Okay. So that's probably, so that's something that happened. Things are always changing.
Oh, changing. I mean, I've had, I've been a mortgage broker for 7 years. I've saw a significant change in the laws, some for the better, some for the worse. But it's kind of doing a whole course again. We have things coming in, what you call the taxes exemption in certain conditions. That's something I'll need to learn still. It's not been issued just yet, but it's not applicable to the US. But what I'm trying to say, the games. The rules of engagement change while you're doing your mortgage.
They can.
Especially if you are buying a land and building on it. It's a complete nightmare.
For sure. There can be quite a bit of uncertainty. So like you were talking about the differences in the home buying process. So we were talking about when you buy a property in Portugal, I think, would you say it's pretty much absolutely necessary that the buyer should get an attorney to represent them, right? And I think that's important because back in the States, the title company that's facilitating the closing is a neutral party. So you have a title insurance policy which protects the amount that you bought the home for. So if anything were to come up later on that says, hey, there's a defect in title, or somebody's relative was forgotten about and they actually still own this property, they had no legal right to sell it. Things like this can pop up, but the buyer has title insurance. In Portugal, I've kind of figured that having an attorney that protects the buyer is important, because there's all these unknown things that as a foreigner, this is a new landscape, right? This is a new way of doing business. There are new expectations as to what we need to do to perform. Just the process in general is quite foreign as a North American. And I think having somebody that's your representative to help through the process is crucial. And I see stories a lot online, whether it be Facebook or something, about foreign buyers that get burned here. And they trusted like the realtor. They go, oh, everything's fine. You don't need a home inspection. You don't need an attorney. I've done the paperwork, and just show up to the CPCV, pay the money, sign the document, everything will be fine. And guess what happens later on? They find out there's a problem. The property is illegal. The illegal property you can't do a mortgage on it because the property's illegal. So, this is one of the main things that I would recommend to any foreigners buying property here is to make sure they hire an attorney.
Yeah, I think in we're gonna go back to this side of the closing, but what I also would like to address, like in Portugal, when you buy a property, the only way to get the property off the market is to do a promissory note.
Yep.
So tell me your experience. What happens then?
So that's a big thing for me because, so in the States, when you get a loan, when you're signing a contract, you give what's called earnest money, and you pay that to the settlement agent or the title company who's handling the transaction.
Right.
Usually, sometimes it goes to the real estate office, but it's either to the title company or the real estate office, and it's usually a fairly low amount. Like, if you're going to buy a $500,000 house, you might pay $5,000 or $10,000 to the title company to secure
the property,
to take it off the market.
Yeah.
Now, and also the standard contract has things written in like a finance contingency and a home inspection contingency. So you'll have 10 days to have somebody come out to the property, inspect it, and if they find a problem that cannot be resolved between the buyer and the seller, or makes the buyer uncomfortable,
I see.
they can back out of the contract and get all of their money back, no problem. Finance contingency, I know they exist here, but I think in general, sellers don't like to put them in, right? And so in the States, if you write a contract with the finance contingency, for any reason that loan is denied, the seller has to release the money back to the buyer. Here, the CPCV process, I would say standard is what? 15%?
Yeah, 15, 10,
15,
20.
10,
It's
15, 20.
Tailor-made, yeah.
Cash directly paid. Oh, sorry, I'm tapping on the table. I'm not supposed to. Directly paid to the seller. It goes in their bank account.
Yes,
it doesn't go into an escrow. It doesn't go into a title company. I think you could probably specify it, but if you, as the buyer, request it, I think most sellers are going to say no. It's going in my bank account. And if for any reason the buyer does not perform and they don't close on the original CPCV deed date, whatever the date is that is mandated in the CPCV, the seller keeps it.
That's
and
right.
And there's really no way for the buyer to get that back, and so it's buyer beware for sure.
But if the seller does not perform, you get twice as much. Is that right?
Yeah. So like in this situation, if it's a €500,000 property, the buyer's putting down 75,000 euros. If the buyer can't close, because maybe they didn't have a good mortgage broker like you that was able to make it work, or for maybe something happened in their family. They don't buy the house, seller keeps the 75 grand. But like you said, if the seller can't perform, maybe there was a brother that didn't agree to sign it, or something like that, then they have to pay the buyer 150,000 euros.
That's quite a lot of money.
That's a ton of money, and that's crazy.
So beware.
Mind-baffling.
Beware to keep your money out there, and one of the things I'm really careful about. I mean, of course, as a mortgage broker and not being a online broker, let's put it a bit more emotional or more humanized. One of the things I really care about is reputation and confidence. And I'd rather not to do a business if I see there's potential of the closing goes south than actually moving things forward. Well, the thing is, what happens to most realtors is that they're commission based and they want to push you to go to the business, or if there's like 3-4 different buyers line up, you get it changed. So they're really interested in closing the business. Yeah, that's right. Okay, so we've covered that. Paperwork for the closing. This is the biggest nightmare I have, and I keep on having. What do you reckon about this stage in Portugal?
First of all, I love that you use the word reckon, because that's a very much, I was born in Texas, I grew up in Oklahoma, and reckon is a word that is not often used even in the US. And when I heard you say reckon, maybe that's half the reason I hired you. I don't know.
Okay,
but back to the question, the paperwork at closing. It's, to me, I think it was one signature. So we've bought 2 properties now. The first one I financed with you. The second one we paid cash. There may have been 2 or 3 signatures when I got a mortgage, and I think when we paid cash there was only one. And that to me was a little bit crazy, because when you buy a property in the States, you were signing 40, 50 pages.
Yeah, yeah.
And here it was quite straightforward. But maybe that's not really the question you... Was there more to that
Yeah,
question that I'm
like
not...
like basically, if you want to do closing via banking, of course the requirements are higher.
Yeah.
We've got the title, we've got the tax office registration, and then depending when the house was built, like if it's prior to 1951, it doesn't have an habitation.
Habitation. The
Yeah,
habitation
this
license.
kind of stuff.
Yeah, actually,
So-
that was that, and that's funny you bring that up because when we were closing together, I don't know if you remember, but the sellers did not bring their habitation license.
Yeah,
And
yeah.
one of the guys that was selling the property literally had to leave the closing and go run home and bring back a piece of paper.
Oh, wow.
So, yeah, that was a document that I'm not familiar with because
Mm-hmm.
if a property is not habitable or safe for habitation in the States, I don't think you would be at the closing at
Yeah,
all.
yes.
So
That's right. Yeah, it's kind of one of the big difference doing this kind of stuff. Okay, going back to the appraisal side. So you did say that in US it's not necessary.
not all the time.
Yeah.
Sometimes it's not.
Yeah, yeah. While in Portugal, if you're doing banking, or let's say a mortgage, you need to have an appraisal,
Yeah.
which is done by a certified surveyor.
Mhm.
Okay, but you did mention that inspections here are not compulsory.
Right.
So how would you get around to this kind of stuff? You know, being a U.S. citizen, and you want to make sure that the property has got, no problems on the piping,
Good
electricity.
condition, yes,
yeah.
that kind of thing. Exactly. So in the States, it's not compulsory either. However, it's just so normalized that
Mhm.
almost every single person that's buying a house is going to go through a home inspection because
Yeah, yeah.
you want to know that everything's checks out. And the sellers expect that.
Mhm.
So that's why it's literally written in the contract. And the only thing that the buyer and seller negotiate on is the number that goes in that field. So
Yeah, yeah,
is
yeah.
it going to be 7 days? Is it going to be 10 days? Is it going to be a 15-day inspection?
Mhm.
So that's basically expected. And here, like when we bought the property, we brought our architects because like we knew that this was going to be a huge renovation project. So should we bring these guys in to just do a quick check and hey, are the walls strong enough and all these
Yeah,
things?
yeah.
But other than that, like I think is it kind of rare to have people do a home inspection in Portugal?
It is, yes.
So how do you know? How does a buyer know then, like if they're gonna have problems?
Well, I suppose you can negotiate with the seller, get an inspection, and get a tailor-made clause. But the likelihood, given the fact that Portugal right now is trendy and is a seller's market,
Yeah.
I reckon it's going to be quite, there you go, reckon again, yeah,
You see?
quite difficult for the seller to accept a clause.
Yeah.
There is, however, I mean, if provided the property has been built after 2004, it would have something what they call the technical sheet. So basically, all the material has been done, who did it, and it's got a guarantee on the back of it.
Okay.
If it's not, I suppose you have to be, let's hope
You just have to
nothing-
know. I think
Yeah.
you, as a buyer, I think the word of the day is not necessarily buyer beware because it makes it seem scary.
Yeah.
It's not scary. It's be smart.
Yeah.
So if you're interested in a property and you want to buy it, you've been approved by a mortgage broker like Eduardo, making sure that when you start looking at properties, you approach it the right way. So like, is there mold and mildew issues? Especially a lot of the apartments in Lisbon, particularly, are below the ground, and in the winter can be quite moist. So can somebody just go and could a seller just paint over these problems and then not have any
does
kind of
happen.
repercussion?
Yeah, it
so
does happen, yeah.
So having people that really know, that a good real estate agent that represents you and not necessarily the seller. And that's kind of something that I think is a huge difference here is in the States, we have the MLS system, right?
Yes.
So it's a data aggregator, computerized model where all of these properties are put on the open market and everybody can see them, buyers, sellers, everyone. It's available. It's public. Versus here, like you may have a Remax office that only shares this property with Remax, right?
Yeah, yeah.
And then you have Keller Williams. And so Keller Williams only shares with Keller Williams. So if I hire João to represent me as, my realtor, as my buyer's agent, but he works for Keller Williams, I might have difficulty seeing Remax properties because
Yeah.
these are not. There's not a computer system where it's all shared, and that's a huge difference.
Yeah, it's not as transparent. There are
Yeah.
ways around it, and I understand there's quite a big fight between all these realtors and different agencies in the
Yeah.
market, and you got Facebooks, you got hundreds of people who are trying to sell direct,
Yeah.
and if you're buying direct a property, my advice to beware.
Yeah.
Because the people on the side needs to pull up certain, especially if you have a mortgage attached with it, be really aware because these people are not on top of things,
Yeah.
and they don't know if you can actually sell the property on the illegal side of it. You know, so if you're buying and once you close and it's your end, that's it. You know, you can get really hammered. Yeah. I was funny earlier. You mentioned that you hired me. Tell me one thing. How much did I charge for my services?
Nothing.
Nothing.
No.
Really?
Yeah.
You know?
Yep.
Yeah. So basically.
I'm assuming you got paid, right?
Yeah,
You got
yeah.
paid
I
by-
did. Of
okay,
course,
you got paid
of
by the
course I
bank,
did.
yeah.
Okay. There's a law as a certified mortgage broker.
Yeah.
In Portugal, I'm not allowed to take any money whatsoever from my clients. I get paid by the bank. And if a mortgage broker asks you for money, which you will promise to return if it doesn't close or whatever, that's again totally against the law. Does this operate in the US or does it work here?
No, it's not. And honestly, I felt like how often when you have a client that's basically consulted with you and you've pre-approved them or you've worked with them for a while, how often does it happen that the customer goes and actually closes with a different bank? Or
Unfortunately, more than I
okay,
wanted.
okay,
because-
so we share that in common.
Yeah.
And there are times where it's very frustrating because a lot of times even some people will come to me and they've been denied by 2 or 3 banks, and then they come to me and I find a way to make the loan work because I am very creative and I have a really strong ability to be resourceful and solve problems. So in this situation, find a way to make it work, and then, oh, sorry, I'm going to go with this other company.
Yeah,
I'm like,
yeah.
I've done all this work. So it sucks, but it is the same. We cannot charge somebody just to talk to or hire them.
Yeah.
It's the only time we can get paid is at closing.
That's right.
Yeah.
Yeah. So I suppose it comes with the job description, right?
Yeah.
Yeah. Tell me one thing which I'm not entirely sure, comparatively with US. If you are a Portuguese applicant, or if you request a loan to value about 80%, banks on the cross selling, they push you and actually make it compulsory to get life insurance.
Yeah.
How does that work in US?
Yeah. So I would say, and in the U.S., if you're putting down less than 20%, you are required to get mortgage insurance unless you're in a very specific loan product. Like, for example, VA loans. You have to be a veteran to get a VA loan or eligible for a VA loan. And so if they can finance 100% and not have any mortgage insurance. But other products are with less than 20% down require mortgage insurance. But it's interesting because it's not life insurance, it's mortgage insurance, and it protects the lender in the event of a loan default. So if you borrow money from Bank of America and you put down 5%, your loan will have not life insurance. Your loan will have mortgage insurance. If you then default on that loan and Bank of America loses money in the sale, they lent you $300,000, they went to foreclosure and they sold it for $270,000. They lose $30,000. They will then go to the mortgage insurance company and get the difference back. So it's not life insurance. And that is compulsory on almost all loan products, but it's actually very reasonable.
And the premiums,
and it goes away too. Like when on FHA loans, it does not go away; it stays forever. But on conventional loans, once you hit 22% equity in the property, you request that the lender remove the mortgage insurance, and as long as you have the equity, then it goes away.
Okay, all right.
Yeah.
That sounds good.
And it's cheap too. Like in general, especially with good credit. Right now I'm doing a $720,000 loan, and the mortgage insurance on it is $108 a month. So that's not much.
That's not much. Yeah.
But I found it quite frustrating because I have a lot of life insurance. Like I have a young family, and I'm the breadwinner for our family, so I need life insurance, and I have quite a bit of it already.
Yeah.
And
Yeah.
then when I'm getting a mortgage in Portugal, they're like, "Oh no, you have to have life insurance." And
Yeah.
I'm
Yeah.
like,
Yeah.
"What the hell? I already have life
Yeah,
insurance. I
yeah.
have a lot of it.
And you
What do you
put
need more
down
for?"
the beneficiary, the bank.
Yeah.
So something happens to you or your
Yeah,
whatever.
exactly. What do I need? And with the amount of money you're putting down,
Yeah.
you're putting 20, 30% down. I forget exactly what we did, but
Yeah.
30% down. I'm like,
30%.
why do I not, 30, you're only lending 70% of the value. What
Yeah,
do you
yeah.
need life insurance for?
Yeah, yeah, yeah.
So that was definitely a learning
Plus,
experience
yes.
for me.
So for people to be aware, with most banks, if you go for 70% loan to value, you will get life insurance exemption, but you won't need to pay a mortgage insurance. You need to pay property insurance.
Yeah.
So I understand where you're coming from. I think from both the banks and the sellers, the buyer's perspective, it's more convenient to have the mortgage insurance rather than life insurance, because you can have your own life insurance and tell your family you are the beneficiary of this life insurance, and it's pretty much all covered.
Yeah.
Yeah. So that's interesting to know. Yeah.
Yeah.
Right. There's a few things also that we may need to address, or we need to address, which is the appraisal process. Okay. So basically, you agree on a price on a property. Let's say, for sake of argument, $500,000. Okay, and you are dependent on the appraisal to just lock in your finance.
Right.
Yeah.
Yep.
So if the appraisal comes in lower, then probably you will get less finance.
Exactly.
Which can be a hassle.
Yes.
Yeah.
Yep.
So if you were in a promissory contract, there's no financial clause in it, you may be in dire straits, right?
Yeah, exactly.
Yeah.
If you're, let's say you're buying a €500,000 property, and you're financing 70%. So it's based upon the value being 500, and you borrowing 350, right?
Yeah.
And if that value then becomes, let's say 400, if you get an appraisal and it's 400, and you're only borrowing 70% of that, now you're at 280 on your loan amount. That means you need another 70,000 euros, and if you don't have that readily available, you could be in a pickle.
You'll be totally dependent on the goodwill of the seller.
How are
I
you
suppose.
seeing appraisals come in though? Like in general?
It's quite funny. Well, of course, each case is one case, different to the other. But generally, like 2 years ago, the appraisal would come in above the listed price.
Mm-hmm.
Today, even though with the tight market, appraisals are coming in slightly above the closed price.
Okay.
Okay, we're talking about still a difference of 5 to 10%, which
Okay.
is quite a lot. You know,
Yeah.
it's more than enough. But I've had more often in the past 3 months where the appraisal come in lower, and basically it's not good enough.
Okay.
And it's funny.
Has it killed any deals yet?
Oh yes, definitely.
Really?
Yeah,
Okay.
it is. You should be
And in these
careful.
situations, without the finance clause,
Yeah.
the seller keeps the money, right?
Well, my advice to you: just close this promissory note. Once you got the appraisal, you know it's happening.
Yeah.
Otherwise, you can be. And remember your case.
So you can actually order an appraisal before the CPCV?
You can order the appraisal, but the only valid appraisal is the one from the bank.
You're
but
right.
if you hire independently a surveyor and you keep this, you can always argue, hey, I've done this.
I've already done it.
Yeah.
I saw, but you can't. But the bank can't use it, of course. And that's the same on our side.
It's quite funny because the inspector or the surveyor comes in, you values the property, and I remember your case. We had a huge difference in the appraisal, right? We talk
Yes.
about the 200,000
Yeah, because
euro.
we were doing a renovation loan.
Yeah.
And this renovation loan was subject to the value of the completed property.
Right.
And so I think the first appraiser
Mm-hmm.
did not fully understand what the final product was going to look like.
Yeah.
And so that's where we had, there was a huge, I think it was more than a couple 100,000.
Yeah.
I think it was.
It made a huge difference on
yeah,
your
and
side,
thankfully, you guys were able to order a second appraisal.
Yeah.
And that was, I was kind of shocked on that, because in the States, the
doesn't
only way
happen.
you can order a second appraisal is if you show proof that they made a mistake or there was some kind of prejudice or bias. That's
correct. Yeah. So while on the conversation, what I'm going to do is ask Eric if he could pull the chart on interest rate.
Yeah.
Is that possible to put it on the screen so we start discussing?
Sure.
I brought a graphic which
Okay.
compared the interest rates across different countries, so that you can tell these. Eric, are you there? Just hold on. He's telling us to
No
hold
worries.
on.
And
So-
earlier, we're talking about money and costs, and I think it's important for people, especially from the States that are buying in Portugal, to understand
Yeah.
what, on top of the down payment required,
Mm-hmm.
what kind of closing costs would they
Yes.
experience?
Yeah.
Because
Oh, yeah. Yeah.
you've got the deed tax, you've got IMT, you've got
Yeah. It's
notary
quite a
fees.
lot. Yeah.
Like if you were to say you're buying a €500,000
Yeah.
house and you're putting down 30%, so you're borrowing 350
Mm-hmm.
on in general, what kind of closing costs would this type
I
of
would
person?
say close to 7 to 8%.
7 to 8%.
Yes.
That's a big difference.
That's right. Yes.
Yeah.
I remember that.
Yes.
It is true. What makes a big difference on this one is what we call the property tax.
Yes.
So we're talking, especially
Is that IMI?
IMT. Yeah,
IMT,
IMT. So we're talking about a property tax, or let's say even say a property which worth $1 million. On property tax alone, we're talking about 8.5%.
Yeah.
Okay. The good side of it is that on a year basis, we have a different tax we call the IMI,
Yep.
which is much, much lower. We're
Right.
talking about €1 million, $2,000 a year.
Yep.
While in US, it can be as high as 5%, right?
Absolutely.
Yeah.
Yeah. So that's what I kind of wanted to get at is
Yeah.
the upfront costs to acquire a property and to buy it. The closing costs are substantial. Like you said, 7, 8%. So if you're looking at putting down 30%,
Yeah.
in your mind, you might think, oh, I need 30%. No, you need 30% plus 8%. You need 40%.
Yeah. Yeah.
And versus in the States, closing costs, of that same price range, you might be looking at 2 to 3% in closing costs. But then annualized, your property taxes that you have to pay to your county can be for $500,000 property
Yeah,
or probably like $7,000
Yeah,
per,
yeah.
maybe $10,000.
Yeah, yeah.
Versus here, I think that I got a property tax bill. It was like $300.
Yeah.
And I'm like, or €300.
Yeah.
And I'm like, this is a huge discrepancy
Yes.
between the states. In Portugal, you pay high taxes and closing costs at closing, low taxes annually.
Yeah. Yeah.
Opposite in the States.
Right. Yeah. So that's very important. The affordability to keep a house, it's much easier in Portugal rather than the US. Yeah.
Yep.
Okay. So Eric, thank you very much for putting this graph. So basically over here we have different interest rates. I would like you folks out there to focus on the blue and the yellow line. So we can really tell this basically until 2023. So we can say for safely that interest rates in US are higher.
Absolutely.
Absolutely, yeah. So this is kind of different, and in in a €500,000 property, we're talking about probably like a 500 difference between monthly installment from one to the other. Wouldn't you say that?
Yeah.
Yeah. So that also depends. That also depends on the type of property. Of course, it's funny, interesting that if you go for a variable rate at the end of 2023, you're talking in Portugal 4.5% interest rate plus the spread of let's say 1%. So we'll be paying 5.5%. It's interesting that currently in Portugal right now you can close with a 5-year mixed rate, let's say close to 380. So that makes quite a big difference,
Yep.
especially on monthly installments as well, right?
Yeah,
Okay.
absolutely.
Do you have any opinion, of course, on interest rates? It's I know it's hard to make predictable because you don't control. If you were buying a house using interest mortgage, what type of mortgage would you be interested on
Rates right now in the States are in the upper sixes,
wow.
sometimes even lower sevens.
Yeah, yeah.
And that's for like a 30-year fixed rate because that's pretty much everything we do.
Yeah, yeah.
You can get some portfolio ARMs, adjustable rate mortgages at lower rates than that.
Yeah, yeah.
But in general, they're upper sixes, lower sevens.
Yeah.
And they haven't been, they've come down a little bit lately. They were almost 8% about 2 months ago.
Yeah.
And so they've come down a little bit, but they don't show any signs of dropping dramatically anytime soon. Hopefully, maybe 12 months down the road, we'll see what the consumer price index does, and inflation needs to cool off a little more. But yeah, to answer your question, they're around 7.
Yeah. Right. We are getting towards the end of the. Can you believe it's been already 1 hour?
Really?
So we have 1 minute and a half left to talk about. One final thing. We saw interest rates that can move up or down.
Yeah.
What about exchange rates?
Exchange rates.
What did you do? Because you're making your income in dollars and
Yeah.
you're paying off something in euros,
Yeah. So we haven't had to move much money lately. But there for a while, as I was preparing for this large home purchase a few years
Yeah.
ago, we needed to move a lot of money from the States to the I'm sorry, from the States to Portugal, and we use there's a company, it's called Wise, TransferWise.
Yeah,
So
yeah.
it's basically acts as an intermediary party that
Mm-hmm.
just accepts our U.S. bank transfer and then transfers it into the Portuguese bank. But a lot of that money was moved over when rates were like 1.1. It was $1.17 to get
Wow.
1 euro.
Yeah, yeah.
So, kind of got burned.
That's
Got burned
right.
quite
Yeah.
a bit,
So
but
be careful out there. You can, you
yeah.
can get exchange insurance for that.
Oh, yeah?
Yeah, that's right.
Okay.
Right, Ben. Look, mate. Thank you very much for coming in.
Yeah.
I'm sure we could have kept another hour talking about mortgages difference. There was a really good, awesome experience.
Yeah.
Thank
Thanks
you
for the
very
invite.
much.
No, thank you.
And guys, I hope you'll see you soon in the next episode. Thank you so much, and take care.